Hello. Is this good? Yeah, okay. Sounds good. Welcome. We have a stellar panel here today to talk about the past as well as the future of innovation within FinTech. So without further ado, I'm going to get you guys to introduce yourselves and then also talk about a lesson that we've learned so far, that FinTech firms have had to learn so far in 2024. Maha, would you mind starting?
Thank you, and let me start by thanking Innovate Finance for inviting me to be here. It's real great to be back in the UK. I'm the BIS Innovation Hub Centre Head in our Singapore Centre. Recently actually joined. I've been at the FCA working in this market actually for 12 years prior to that. What we do, just very quickly, is we run projects in partnership with central banks and other regulators to really look at new technologies and how these new technologies are developing to enhance the financial system. That's kind of our work in a nutshell. In terms of your question with lessons learned, I think for me, I've always advocated that the ecosystem has to work together. All parties in the ecosystem have a role to play to ensure that we have a strong and stable, market and industry for everybody to benefit. Investors, fintechs, innovators, customers, etc. And for that to happen, I think we need to, with new technologies coming in, we need to identify the role of regulation. When do they come in? When is regulation right? How much of it? What is the form that it takes? What's the pace that it takes? And it's different depending on what the different sort of technologies are. So is it now? Is it gradual? Is it iterative? As we've seen with crypto, started with AML, then we had financial promotions, and now kind of a full regime is coming down the line. Or is it big bang? Do we actually do the whole thing straight away? Is it principles-based or is it rules-based? So all of these questions are hard questions, and it's not a one-size-fits-all. And on the other side of that, talking about the ecosystem and how all participants play and the roles that they play in the ecosystem, is what can fintechs do when there's new technologies? Again, fintechs don't necessarily have to sit and wait for regulators to come in with regulation, for example. They could think about what the risk management of new technologies are. They could think about what their role is. I mean, the consumer duty is a great example of that, actually, because it's principles-based. It's really looking at what the outcomes are. And without necessarily, waiting for regulators to come in and say, we must do this. Fintechs can use that approach to determine how they want to respond to this. And sort of do the right thing. And that conduct culture embedded, whether you're a startup or a scale-up, obviously it'll be different depending on what stage you are in the life cycle, but I think you've got a role to play there. So look at existing technologies, learn from those and implement them on sort of the new as well. But everybody working together, I think, is the main message here.
Awesome, thank you. And you, Michalis?
Thank you, and thank you to Innovate Finance for hosting us here. My name is Michaelides. I'm Director of Sales and Business Development for BPC Technologies. And to continue, in terms of lessons learned, I think to continue from what Maha put extremely well, I think what we are preaching, shall we say, is collaboration. It's a very fast-moving world. You don't have to do everything yourself, and this is what we discuss with customers, and this is what we also try to implement from a business perspective. Think less about everyone else being your competitor, but actually the ecosystem growth and success of everyone depends largely on collaboration. And this is also what we try to do from a business level. So we encourage our customers and we build out our platforms to be more like integration and orchestration enablers so that you can jump in and out quickly of solutions and services without being too heavily invested in the technology yourself, but rather being able to formulate a useful and quick go-to-market strategy that can ultimately also be profitable and generate the appropriate revenue per customer that you need.
Thank you. And Chirag?
I'm Chirag Shah, founder and CEO of Nucleus Commercial Finance. We are a UK-focused SME lender. To date, we have lent just shy of £3 billion to UK SMEs. We are very tech-focused. Our general application journey is less than a minute, and we decision over 90% of the deals in seconds. So that's really where ML AI have played a major role in these things for us. And just to answer the question, I'll go on two tracks. One, ecosystem, incredibly important. I think more and more people, it had always been important, but in terms of take-up of the new technology and stuff, people are realizing it more and more, and now it's becoming part of the conversation almost at the same stage as product design. Initially, it used to be kind of an afterthought, or used to become part of the conversation much later in the cycle, but we are seeing that change very rapidly. And I know we are going to mention regulation multiple times, I'm sure, during the whole day. And in general, with FinTech, a lot of it, when it started, ended up being what I would call regulatory arbitrage. And I think all the learning, not just over the last 12 months, but over the last 24, 36 months, with all the fines and stuff increasing, people have realized that you can't really just rely on reg arbitrage. And that is where we are seeing a big change.
Okay, so you guys have spoken a lot already about collaboration. So how can the old finance, shall we say, and the new crypto tokenization come together? Maha, could you start?
Yeah, so I think, we can't have, the starting point can't be that one is going to replace the other. I think, we've got, in financial services, we've got systems, we've got infrastructure that's been around for a while that actually is widely used. So many transactions, loads and loads of transactions go through these systems, and they're tried and tested. And so, when we think about new technologies, there's either a substitution element, so something that is going to be better and actually comes in to substitute what's there. When we look at that, I think it's important to think about how we approach this in a measured way. So we think about the path that it's taking, the unintended consequences, what the risks are, and we approach it in a way that's going to experiment with it, collaboration, and looking at what the outcomes might be as we move forward. These sorts of things around, and we hear a lot about things like CBDC, tokenization, and so on. That's going to take time for us to really build that out and have it come in and substitute what we have. So whilst this is happening, I think, I'm not suggesting that we should stop it. I think it needs to continue, but there needs to be, there's a need for interoperability. Because again, when we look at, if we take payments, for example, payments is quite sticky. We've been talking about the decline of cash for the last years now. And, cash is still around for good reason. Similarly with other payment instruments. Now, CBDCs come in and they might serve a particular problem if we talk about sort of retail CBDCs or wholesale CBDCs. But we can't necessarily straight away replace it when some parts of the community will be left behind. And that's what we've seen actually with electronic payments, so we don't want to repeat that mistake. So substitution needs to be done in a measured way and with interoperability in mind. The second, I suppose, objective of new technologies would be to enhance what we already have. And that's a really important objective as well. So if we look at faster payments, Aideen mentioned faster payments and the strength of faster payments in the UK and so on. It's an amazing technology, actually. 100 or so countries have implemented faster payments for various purposes. And this is on fiat currency, and it's doing really well. So there's a lot of conversations around how do we improve faster payments. And to give you an example, at the Innovation Hub, one of our projects was looking at how we interlink faster payments, which are domestic systems, on a multilateral basis cross-border. So really simple AI technology to kind of link them, but it actually takes faster payments to sort of the next level. That's using technologies that are tried and tested that we have today. And then on the other hand, we can use new technologies under our CBDC work, again, just for illustrative purposes. One of our projects is looking at how do we automate compliance checks for cross-border transactions using smart contracts. And so that sits under our CBDC, but it's modular. It could work on any infrastructure. It doesn't have to necessarily have its own new sort of technology or infrastructure to operate. So how does the new technologies support the functioning of existing infrastructure is another kind of sort of key outcome. And with all of that, we need to think of how we do this safely and how we do this in a measured way. It's really important for fintechs to think about these things because, I think we work with central banks and risk management is at the heart of everything we do. But for fintechs, you've got three key stakeholders. You've got your regulators, customers, and you've got your investors. You need to think about how do you make money while also ensuring that the overlap of the interests of those three groups is as big as possible.
Yeah.
So I'll probably leave it there because you probably have more comments on that.
No, I think you're absolutely right. I think interoperability is actually quite a key ingredient of the whole process. I mean, again, like you said, I mean, people have been talking about the end of this and the end of that, the end of cash, which didn't come through, the end of cards, which obviously didn't come through because it's still the accessibility and the global nature of these systems that we have already put in place make it incredibly difficult to easily replace them with something of equal ease of use. Yeah, it's just not going to happen that straightforward. So interoperability is a key ingredient, making sure that you use well-established, well-entrenched, very usable, cost-efficient rails to introduce new and additional methods of transaction, methods of payment over and above those. There's we shouldn't be thinking about lift and drop and just replace the whole thing. It's not how it's going to happen also in a profitable way. At the end of the day, yes, we're talking about increasing the reach of payments, making new payment methods available, open banking, faster payments, all of these incredibly exciting new features in the payments landscape. But ultimately, everything needs to come together in an interoperable manner, and you need to have fintechs thinking about how to use it, how to create profitable business models out of it. It's not an exercise, it's not an abstract exercise. People need to make money off it. And in the first few years of this fintech revolution, a lot of that seemed to have been lost. I mean, people considered that customer acquisition equals profitability. It didn't pan out to that. The cost of customer acquisition versus the revenue per customer just didn't pan out the way people thought it would. So people need to rethink their models. People need to find niche markets that are well-defined and create clear value propositions that can lead to profitability. Yes, you don't need to wait for the regulator. Sometimes these things are ahead of the curve, and then the regulator comes in and takes a holistic view of the landscape and creates the proper framework under which these people need to operate. But ultimately, the road requires, in our view at least, interoperability and profitability.
Okay, so speaking of new technology, let's just move on to artificial intelligence real quick. So how has artificial intelligence evolved the way fintech companies can operate? Let's start with you, Chirag.
It's had a fundamental impact, especially I would say over the last 18 to 24 months. And it's changed the way we offer services, but it's also changed the way customers consume services, right? And from a pure fintech perspective, and we are in the lending space, the three core components for us, right? The customer journey, the customer acquisition. We have got the way we underwrite our credit, and the operational side. And it has had a significant impact on all three. I mean, from a customer journey perspective, if you're looking at a decade ago, a loan application could have taken a day or a week, depending on the lender you're dealing with. Today, we are talking about loan applications in minutes, in seconds, almost moving to a stage where, for a large majority of the businesses, there is enough publicly available information that the business doesn't need to provide anything else. And what we are aiming for is what we call one-click lending, where if the business enters its name, there is enough public information available for, I would say, for about where we sit right now, about 35 to 40% of the businesses, that we can come up with a very accurate decision at that point. right? So, and AI has played a significant role in this. So at the front end, from the customer journey perspective, significant impact. From a credit perspective, the amount of businesses we are able to lend to has significantly increased purely because of the data sets which we are able to now use and rely on and really leverage. So that, from a credit perspective, a big impact, not just in increasing the size, but the portfolios where we have, so we have been lending over the last decade. And if we look at the recent cohorts where MLAI have played a big role on the underwriting side, the portfolios have outperformed the older portfolios significantly. So clearly, it's not just increasing the market space for us, but at the same time, it's really driving growth in a very good manner. And operationally, everything's quicker. The cost base is significantly lower. So I said, in every component, AI has played a big role.
Thank you. Michalis, have you got any thoughts to add?
Yeah, I think that's a very interesting observation. And yeah, we see the same impact. We see AI playing a significant role on the risk management side of things. So we're definitely using a lot of AI to improve and hone our risk management elements, our cybersecurity components. We are also seeing AI playing a significant role going forward in, I guess, what we call a lifecycle management capability. So being able to analyze the data much faster and figure out patterns much faster and create custom-made value propositions for customers that allow them to have access to things that they're more interested in, and in that way allowing them to spend or to focus their expenditure in areas which are of extreme interest to them. And again, from looking at it from our customers' perspective, increasing the customer revenue and increasing profitability. So I think that's definitely AI is a major component in that.
Okay, thank you. So we're going to wrap things up a little bit. So we've seen regulation is obviously a very powerful component of the innovation topic conversation. So what do regulators need to do to make room for innovation? Can we start with you, Maha, please?
Well, they need to be part of the conversation. They need to be innovating themselves. Actually, I think if you look at what central banks and regulators are doing around the world, they know that this is important to them. We're big believers in public-private partnerships. I think the dialogue has to be. It can't be one-sided, and there are a lot of examples around that already. Actually, on the AI space, the Bank of England and the FCA here in the UK have had this public-private dialogue around AI. And so more of that needs to happen. I think we see sandboxes are a great tool. We heard about sandboxes yesterday. That's another way in which you can test these. So, there's a lot that regulators can do and are doing and possibly need to do more of in terms of being inserted in the conversation and understanding what these technologies are, how they're evolving, and what their role is in terms of ensuring that they evolve in the right way.
Any thoughts?
Yeah, I would exactly 100% agree with that. I would also say, be part of the conversation, listen as well, and take the commentary and take the input from the ecosystem, from the participants, understand what has happened in the current iteration, let's say, of regulation, take the lessons learned and incorporate them quickly and efficiently in the new layer that will be of regulation that will be introduced subsequently. I think learning quickly and iterating is going to be key to the successful coexistence of markets and regulators.
Sure.
I think regulators are always going to find themselves in a very difficult situation. The pace of innovation is just so rapid. Everything is so agile. And by nature, the regulatory framework tends to be designed to be more longer term. And it's becoming obsolete very, very quickly every time it's done that way. I think the framework needs to become more agile. The turnaround time needs to be a lot quicker. And it's not about just looking at historical data to kind of come up with a future framework. I think the regulators need to build that agility and have the right mindset to say, okay, it's a constant evolution. There is no framework which is kind of there forever. Of course, we want certainty, it kind of goes against that, okay, you have certainty, it will drive more innovation. But I think in the current environment, we need the right balance between that certainty and flexibility and agility from the regulators.
Awesome. That's a great way to end. Thank you so much. And thank you guys.
Thank you.